In this video, we're going to cover how to best pay yourself right now in 2022. All right, let's jump into it. And there's a few different things that we're going to go over today. Firstly, let's start with single member LLC versus multi-member LLC. What is the difference? What does it actually mean? And what can you do about it? Right. So a single member LLC is also known as a sole prop, and usually is a disregarded entity. The main difference between that and a regular multi-member LLC is that you have limited liability. So you get more protection using an LLC than just being a sole prop. So that's really important if someone's trying to sue you or come after your assets in your company, that you can limit the liability of that in that one entity. So it's really important that you have some kind of protection against potential lawsuits or people coming after your assets. So you could do that quite simply by setting up an LLC and making sure all of the terms and conditions within that LLC are set. Now, the next question we always get is then how do I do that? What do I need to do? There's a whole host of things that you can look up online, but simply put, you need something called an EIN number, and that's an employment identification number. It's a 9-digit number issued to you by the IRS. Once you have that number, you can go down to the bank with your operating agreements and your other state regulatory rules and apply for a bank account. They'll usually give you that pretty much straight away. It takes usually 20 to 30 minutes. You'll sit in front of a banker, you'll show them your ID, you show them the EIN number, you'll show them your company documents, and boom, away you go. Now, when we start talking about getting paid, that's really where the fun comes in, because there's multiple ways to do this, right? So you could do this as a distribution mainly. You could do it as a W-2. There's plenty of ways to get money in. We're going to break all of that down for you now and take the confusion completely out of it. So most common is a W-2. So what is a W-2? That means some kind of payroll system. When you're using that, it could be ADP, it could be Gusto, Paychecks. There's a whole host of different payment processes out there, and you can do this in a number of ways. Depending on how big or small you are, you might want to take something called reasonable comp. If you've got an SCorp or if you've got an LLC, you can just process a payroll and be done with it. There's also different types in terms of, do you want to do this weekly, bi-weekly, monthly, quarterly, or annually? And that again just depends on the type of business you are, how you operate that business, how well you really know your numbers, because a lot of it all boils down to cash flow. And what we're going to talk about is how to best set up yourself so that you can get the maximum from a tax benefit, protection benefit. So we've already established that using an LLC is going to give you more protection than being a sole prop. And then now let's talk about the other big difference, because we talk about LLCs versus SCorps a lot, and what are the main differences between that. So when we talk about an LLC, we talk about the limited liability. When we have an SCorp as an example, the main reason people do that is for tax deductions. But if you have the right type of structure behind the LLC, you might not need to switch to an SCorp. In an SCorp, there is something called reasonable comp. And reasonable comp means, in simple English, that you would pay yourself what is deemed a reasonable salary for that year or month or that period of time's worth of work. So what really that means to you is, let's just say you're a doctor as an example. We have a lot of doctor clients. A reasonable compensation for a doctor might be a little bit higher than that same compensation for a bank teller. Usually doctors make a lot more money. What is that actual number? You determine that. You can look at the guidelines on the IRS website, but you can determine that. So there is a bit of leeway there in determining reasonable comp. But the main difference again is that the S-Corps are shareholder based versus the LLCs, which are membership based. So if you're a member of an LLC, you own that similar but in shares. Now, this might seem like a small semantic between shares and members, but it does make a big difference, especially when we go into the next step, which is what is a distribution? So a share of profit that's distributed to the owners. This is different than a W-2 or a payroll that you would run. This is from the profits of the company distributed to the members of an LLC, and that then creates a taxable event where you're passing the money on from the LLC, which could be taxed as a partnership, sole prop, or many other things, but it's being passed over to the members of that LLC. Similar with the shareholders in an SCorp, it's just a pass-through entity. So whatever money is made there is fully passed through to the owners of that SCorp as well. So it's really important to know the differences between the two and what's best for you. Depending on your situation, an LLC might be better. Depending on if you need a medical license attached to your company, like a lot of medical doctors do here in California, then sometimes that's going to mean the SCorp is better. But you could also have a holding company structure, and we can draw that out right now. So as an example, a lot of our medical clients are set up like this. So they have an SCorp set up because that's attached to their medical license, right? And what we can do in this situation is have a holding company, which is an LLC, sit on top of that, and then the holding company would take the money out or charge a management fee to the SCorp, and then the money would come into here, and then the LLC would then have multiple members, and then the members of this LLC could be you as an example. It could be your trust if you have a trust set up, and that is a really good way to protect your assets and reduce your tax liability if you have a setup similar to that, if you have an SCorp. Now, if you don't have an SCorp and you just have a straight LLC, that could make things a lot easier, because what we could do in that regard is just switch straight to an LLC being here. And if that is a multi-member LLC, then you could just add more members in. So you could be already on there. You could have a trust in there too, if you want real asset protection and to reduce your taxes. And you could have a wife in there, or you could have your kids on there. So there's plenty of options. There's plenty of options if you already have some kind of LLC in place. It's a multi-member LLC. You can add or remove members as you wish, and that's not going to create any additional taxable events unless you issue a distribution to them. So the key thing is to know what size you are, what makes more sense in terms of payroll or no payroll, what type of distributions you want to make to those shareholders, when you want to make them. There's a lot of different things going on, and if you would like to kind of demystify this a little more, you can click the link below or the end card here and join our free group, where we'll be offering lots of advice and lots of free tools to help you understand what is the best structure for you and your family. And you can click the link below. Thanks. Bye.